Alright, one more video for this holiday weekend. How could I have any more analysis? Well, I was up late last night talking with StockEd, and he uses Harmonic Trading Patterns by Scott Carney, and he and I were able to think of a potential stock market crash scenario. So I have released my short squeeze theory, and this is the stock market crash theory. Opening up SPY, I've been following a descending broadening wedge. I've shared it a lot. On Friday, I think I went over this Atom and Atom double bottom I see, and I put a target on the board for 29. And I've been thinking about how the price will interact with the top of this pattern when and if it gets there. I decided to do a little more analysis. I like to just completely clear the board, draw what I see, and then reanalyze. And when I did that, I found myself studying busted double bottoms. So I have Bulkowski's website, thepatternsight.com, pulled up above me. You can see it. Visit the site. It's amazing. The information here is incredible. It's very, very valuable. It's pretty much all I use for my analysis. So a busted double bottom. He says that a stock forms a double bottom, which confirms as valid when price closes above the top the top of the double bottom. Price rises no more than 10% before dropping and closing below the bottom of the chart pattern. This busts the upward breakout, and the double bottom becomes a busted double bottom. Shorting a stock showing a busted double bottom in a bull market is probably unwise, since the average decline is just 15%, and that represents the results from almost 200 perfect trades. I'll discuss more performance statistics later. Here we are, Bulkowski saying that the average drop after a busted double bottom in a bull market is just 15%. It's just 15%. That's not so bad, right? I mean, yeah, but let me pull up this new chart that I've got cooking. I think I have it on, I don't know, is it blank? Actually blank, here it is. Yeah, so let me just walk through this chart. I thought about just drawing it out on the video, but I want this to be short because I gotta tell you, I like to watch these videos. They're for me. This is a vlog. It's my journal, okay? This is me thinking. I'm putting my thoughts, my emotions, my trades all here out in the open. If it can help you, great. But remember, this is ultimately for me. I appreciate everyone's viewership and support. It really does mean a lot. If you want to join the Discord, you can watch my chart live. This is all great stuff. I am really enjoying myself. Please join me on my journey as I trade. Okay, the stock market. What's it gonna do? Well, we have this double bottom in yellow. And you can see that the intermediate high here was, I think it's right here at 472.87, and the price did close above that level, forming the very top of the market. But then, after confirmation that the price moved down, 1, 2, 3, and then it just kept dropping. And these two bottoms formed an uptrend which broke at that time. The price fell and caught itself into a level of horizontal congestion. There's some support through here. The price came back up and double topped at that trend line that was formed by the bottoms of this busted double bottom. Now, what's a 15% decline from this busted double bottom? Okay, it's way down here at 381.58. And you'll never guess what the low was, the ultimate low we've had that we've seen. Let me just zoom in on it. Look how close this came. Look at this candle right here. With a low of 380.54. We came within $1.04 of that target, or something like that. Like, that's crazy. That's crazy. So that busted double bottom target was a fantastic target. And now I'm worried because guess what happened after this busted double bottom formed? We had another double bottom with an uptrend form and a measured move down that busted it with a level of horizontal support and resistance, forming some congestion here, and then coming back down and forming another level of congestion. It looks like a fractal. Oh no. Yeah, because, well, this is another busted double bottom. And if this is a bigger pattern and we're going to see a rinse and repeat scenario, I think we have a very realistic rise up to the uptrend that was formed by that last busted double bottom. And if it's going to play out like exactly the same, we're going to see another double top as we did back here. Now, this doesn't have to double top. This could just come up here and tank, or it could come up here and break out. And this is where the short squeeze theory is really reliant on what happens in the broader markets. I think that if SPY and the other index funds, of course, can run and break out above and specifically on SPY, it's going to be this level, this 437, 440 level. If the SPY can get above that level, then I'm thinking we could see AMC run up to 54 as the stock market recovers in general and we start rallying like no one's ever seen. That'd be great. I would love that. However, if the price rises and stops and stalls here, this could bring AMC to 25 and stop, and then we see this the price drop again, which would be super frustrating. But it's very possible. And if that's the case, the price target for this busted double bottom right here, it's low at 349.04. That's a target in the mid 300s that I've been talking about for a while. And this would represent a 50% retracement from the low after the COVID crisis crash and the high we saw last year. It's 8 cents off from the 50% retracement. So that's what I saw when I broke down the charts and looked at them again. And this is my stock market crash theory. If SPY fails to break out to all-time highs, and it just turns around before it even gets to 500 or 450, that is bad. I'm going to zoom out into the monthly chart and show some uptrends that I have. Time-wise, I'm right about where I want to be. I like to use external trend lines. As to say, I like to draw a trend line from bottoms to valleys without cutting through the price at all, and that's what this dashed line is. So this is the 2008 crash back here, and this trend line represents the uptrend that was established by the low in 2008. Now this solid green line, this is an internal trend line. That means it's going to cut through the price, and I really want this to touch as many valleys as I possibly can to make it more valid. This is a more realistic target, right, or more realistic level of support. And you can see that in here we go, 2020, the crash came all the way down through there and defined where that external trend line was placed. But you can see that this bottoming pattern occurred below this uptrending support, and this is very common to see bottoming patterns appear below uptrends and topping patterns to appear above downtrends. So here's what I've got. That puts us on course, of course, to hit that internal trend line. And if at that point the market bounces, that is a healthy retrace. That is a healthy retrace. 50% comes down, it pops back up. It's really not that bad. Look at it on the grand scheme of things. It's like a dent. Like, come on, that's nothing. Come on, just what's the panic about? However, if the price falls down to the external trend line down here, okay, that's a little more serious. That's a little more serious. And honestly, that could really happen. It just depends. There's some geopolitical things that could occur. There's some economic data. We have FOMC meeting notes coming out. I can't remember when. What's actually happening? I think Powell's talking next week. The Fed's going to send the markets one way or the other, and it's a big deal. It's a big deal. I know I said last week was one of the most important weeks, and it was, but this coming week is also going to be extremely important. Can this rally survive? Will it continue? Will it pass above 440? Or are we going to see a harsh and merciless drop down to 350? I don't know, but it just depends on what happens when the price interacts at this level. So this is going to be the ultimate deciding area right here. What happens within this circle is going to ultimately determine whether or not the markets reach all-time highs or if we go in for some serious pain. And that's what I have for today's analysis. If you want to join the Discord, I'm going to try to remember to put a invite in the video description. I'll do my best. Happy trading.